they're now pursuing this aggressively. So investors obviously sort of cottoning onto that angle on this story. Expect some news from Japan Tobacco about diversification fairly soon. Matsushita Electric Industrial is going into a new operation, or a new arm called mobile broadcasting, which is this is an interesting little company. It's taking 10% of mobile broadcasting. Now, the mobile broadcasting shareholders have people, heavyweights like Toyota, Toshiba, Fujitsu, etc., etc. What this company actually does is it pumps in signals to moving vehicles, to cars. Basically, you get a data information service in your car. At the moment, it's not television, no CNBC on it at the moment, sadly, but they're working towards updating it and getting it even more comprehensive in a couple of years' time. But just looking at Matsushita Electric, that's up 13 yen at 1780, taking a 10% stake in that new company. I've just got time for one other quick one. The Japanese shipbuilders orders for 10 new large ships. That in itself is not particularly exciting, but what probably is moving the heavy industry stocks today is that these ships are actually, they're new low-emission ships, and according to new emission control standards, ships have to meet these new controls by the year 2000. The Japanese shipbuilders are seem to be the ones leading the way on the technology to provide this. Companies like Kawasaki Heavy, Mitsubishi Heavy, also up to date. Anyway, I haven't got through many so far, Cecilia, so I have to come back with a few more Japanese stocks and some interesting news in Australia as well a little bit later on.
All right, well, looking forward to that. Thanks very much, Andrew. Time for a short commercial break now, but do stay with us. You're watching CNBC Asia Swap Up.
Can you imagine all diseases will be curable? Can you imagine everyone in the world will have enough to eat? Can you imagine our quality of life will get even better? We can, because we at Hearst believe in life sciences.
The world is changing. Our populations are aging. Many retirement funds are diminishing, so investors are working differently. They're turning to more complex strategies, and they're turning to us. We're State Street, and we're focused on the institutional investor to help them better serve the needs of their investors, now and in the future. State Street, serving institutional investors worldwide.
At Unisys, we don't stop thinking about a client's problem until it's solved. Even now, this guy is developing a system that'll dramatically increase Delta Airlines' cargo efficiency.
Are you going to putt or just admire the green?
Solving problems this way isn't unusual for us.
I've got it.
In fact, it's par for the course. Unisys, we eat, sleep, and drink this stuff.
Health and nutrition. We at Hearst believe in life sciences.
Thanks for staying with us here on CNBC Asia Squawk Box. Now let's go back to our guest host, Andy Tan from Standard & Poor's MMS International. So as you were saying before we took the break, that because of the dollar's weakness, Asian currencies are getting a break, therefore seeing reduced pressure on themselves. How long will this effect last? I mean, is it temporary? Are we likely to see Asian currencies go back downwards again once the dollar starts to pick up?
Well, first of all, you have to look at, both the U.S. dollar as well as the Asian economy. So in that sense, if you look at the strength of the U.S. dollar over the last 15, 18 months, part of the reason has been the strong performance in the U.S. assets market. Both the bond market and the equity market has been doing extremely well. That has led to capital inflow in the U.S. economy, and that, of course, has directly led to the strength of the U.S. dollar. But at the moment, what we are seeing is a reversal of that. Dow Jones has not been doing well in the last 1-2 months. Interest rate has been coming down, and we do expect interest rate to drop in the November FOMC meeting. and in the next one as well. So we're looking at a 50 basis point drop in the US dollar. So that rate cut will undermine the US dollar. At the same time, if you look at the Asia, for instance, there are some signs of recovery. Economy in Thailand is stabilizing. In Indonesia, it's not really, improving, but at the same time, it's not getting worse. It's not getting worse than expected. So there are some signs of stability in the Asian country, this country that has been affected by the crisis. So I think that has helped the Asian currency a little bit as well. So I think we're going to see some recovery against the Asian currency over the next 1-2 months.
Even if you're seeing signs of recovery in some Asian countries, do you think Asia as a whole has seen its worst of the crisis?
Well, we have seen the crisis, in fact, spread beyond Asia. The crisis has gone to Eastern Europe, it's gone to Russia, it's gone to Latin America, Brazil, Venezuela has all been hit. So I think this is not just an Asian financial crisis anymore. It is a test of the global financial system. So to answer that question, is the Asian crisis over? I think a lot will depend on the commitment of the global financial community to settle, to look at the issue that has caused the crisis. And if a solution is not found, then I would say, no, the Asian crisis is not over.
Yeah, hi, Andy. Just curious, the Japanese talking about helping out Asia. I think $30 billion is the figure that they're looking at pouring into Asia to help ease the problems, plus this new fiscal stimulus or measures about a new fiscal stimulus package in Japan. Do you think that's also going to go a long way to easing things and stabilizing the yen?
Well, first of all, I think the 30 trillion yen package is looked upon as a commitment by the Japanese to do something about Asia. There has been a lot of verbal reiteration about helping the troubled Asian economy, but this is in fact the clearest sign that they are prepared to put the money where the mouth is. I think if you look at the package, a lot of that is directed towards direct loan credit, which will help some of the countries like Malaysia and Indonesia. But I think the greatest help is going to come by stimulating the Japanese economy in order to allow the Japanese consumer to buy Asian goods, to help Asian exports. I think that's where the biggest help would come from. And also at the same time, the other angle that we have to look at is the weakness of the yen. It would help Asian economy tremendously if the yen were to show some sign of recovery, because that would allow investment flow as well. I think one of the biggest concerns is that Japanese investment to Asia would slow down because of the weakness of the yen.
All right, well, Andy, let's talk a little bit more about that in just a minute. Now, though, let's have a look at how markets that are open at this hour are doing. Let's take a look at Japanese and Australian stocks. In Tokyo, the Nikkei 225 up this morning, rising 2.5%. That's a gain of 317 points, trading at 13,338. Let's take a look at Australian stocks. The All Ordinaries is also up this morning, up about 0.6%, trading at 25.06. All right, now let's toss back to our Hong Kong newsroom and talk to Andrew again. Andrew, what are you watching now?
Thanks, Asina. I just wanted to finish off quickly on the couple of Japanese stocks. Mitsubishi Corporation, the massive trading company. There was news out not so long ago about Monday evening, which is starting to filter through about Mitsubishi Corporation doing a lot of cost cutting and in some efforts to boost their bottom line. They're talking about cutting costs by 40% by the year 2001 and lifting net profits to around about 35% to around about 80 billion yen. Just looking, the market's not over impressed with that. It's down 1 yen at 627 Mitsubishi. So, and just another quick one on Mitsui OSK lines, a 30% boost in profits for the half year. So that was also from cost-cutting as opposed to more business. Australia, interesting stuff going on in Australia on the corporate front involving ANI, which is Australian National Industries. It's now the target of not one but two bids, if you like, or two changes of ownership. This company, the stock was up about 12% on Monday, and then it's sort of the company is saying we don't know what's going on. Well, they know very well what's going on now. There's been a bid, 750 million, $750 million Australian dollar bid by Evans Beacons. It's a cash and paper bid, 3 EDI shares plus $1.45 for every 14 shares in ANI. Now, ANI is saying, we don't like this. This is materially undervalues the company. As I said, it's 750 million Australian dollars. Now, while this bid was being launched, another plan has come in from a private family company, the Smorgon family, which is actually Australia's richest family, who want to buy the steel component or the steel parts of ANI for around about 40-odd million plus. I beg your pardon, around about 300 million plus some shares as well. So ANI's board is veering towards this